All right, welcome back to Yahoo Finance Live on this Monday morning. Well, as we came into 2021, I don't think any of us thought we would spend quite as much time as we have talking about the meme trade. And in his column over the weekend, Yahoo Finance editor-in-chief Andy Serwer wrote a little bit about why this meme stock, Andy, as you called it, a revolution, will stick around. So let's just maybe start with that idea of the lasting impact that the meme trade could have on the market, and why signs are pointing to this bid. If you think about it that way, enduring past just the next couple months.
Yeah, that's right, Myles. And of course, when this frenzy took hold in the beginning of the year, many people thought it was just, signs of froth and something that would kind of come and go. But if you think about what's actually driving the meme stock revolution, if you will, there's maybe something to it. And I say this at the risk of uttering that phrase that always gets people into trouble, which is this time it's different. But, I think it may be different, and that's because of technology. And what really has been driving these investors on WSB and Reddit is to communicate so readily, pun intended, I guess, and that they've actually created a network. And if you think about the internet bubble of 1999 and 2000, investors were sort of spread out all over the place, and the brokers held all the power. And Matt Tuttle was the one, kudos to him for pointing this out to me. But with WSB in particular, for instance, these people have banded together, and for better or for worse, they're able to move stocks around in a way that institutions have only been able to do. And so I think that, because they've sort of been able to feel the effects of this power on stocks, of course, like GameStop and AMC and BlackBerry, that they're not going to go away. Now, it's possible, of course, if there's a severe and prolonged, especially prolonged downturn, that could change. But for now, I really think that, these people are sort of sowing their oats and, just beginning to understand the power that they wield.
And Andy, against that backdrop, payment for order flow remains a very hot button issue.
It does. And, this speaks to Robinhood's business model. And it's controversial. And of course, there are people who are against this. And of course, payment for order flow is basically where Robinhood tells its market maker, which is Citadel in most cases, informs them about the trades collectively. And in return, Citadel affords Robinhood to make these trades free for their retail customers, presumably executing at the same sort of price that they would if the trades were not free. Now, it's not a particularly transparent practice, and that's what actually has a lot of people upset, everyone from ordinary investors to Elizabeth Warren. On the other hand, if you ask the average Robinhood customer, they're probably okay with this. So the one thing they didn't like, of course, is when there were outages at Robinhood. But again, you're trading for free, and you get what you pay for sometimes.
And, Andy, finally, before we let you go, I just kind of wonder, in your mind, if you think about the Robinhood IPO as maybe being, as so many IPOs tend to be, the top for certain trends. I mean, to some extent, Coinbase, right, came public right as Bitcoin peaked. And I'm sure that over the next decade, Bitcoin price will be higher than they are today. But for this local moment, that certainly was a peak of sorts. And one wonders if we won't run into the same scenario here with Robinhood's debut.
Yeah, Myles, you're feeding my beast. I always like to call the top, and I'm always wrong, right? So I'm wary of doing that. I'm wary of that, but sure, you could make that argument, but we'll only know, of course, down the road. And Robinhood is a complicated beast, and they've had some run-ins with regulators as well. But they're really sort of that could be the poster child stock of meme stock traders itself. After it goes public. But on the other hand, it probably won't, because to really be a meme stock, you sort of got to be a beaten down, out of the way property in most cases. But clearly it's going to be a harbinger or a bellwether of something. But what it is exactly, we won't know probably until several years hence.
All right, Yahoo Finance editor-in-chief Andy Serwer. Andy, thanks for stopping by on this Monday morning, talking about your weekend column on the meme stock revolution. All right.